Have you ever wondered how the stock market works?
We hear about it every day on the news, in financial reports, and from friends or family. But what does it really mean? For many people, the stock market feels like a distant, complicated world. It's easy to think that only wealthy investors or financial experts understand it. But the truth is, the stock market affects all of us, even if we don't own a single share of stock. Think about it. The stock market influences the prices we pay for products, the jobs we hold, and even the value of our retirement accounts. When the stock market rises or falls, it has a ripple effect that impacts our daily lives. But here's the thing. The stock market doesn't have to be this mysterious or intimidating place. Imagine this. Every time you hear someone talking about stocks or Wall Street, it's easy to picture it as a high-stakes casino where only a few lucky people make money while others lose big. But what if we told you it doesn't have to be a gamble? What if you could understand the fundamental workings of the stock market and use that knowledge to your advantage? Whether you're planning for retirement, considering investments, or simply trying to make sense of the headlines, in today's video, we're going to break down the stock market in a way that's easy to understand. We'll explain how it works, what drives the prices up and down, and why it's one of the most important components of the global economy. It doesn't matter if you're a complete beginner or if you've been hearing the terms bull market and bear market for years. By the end of this video, you'll have a solid understanding of the stock market's mechanics and how it shapes the world around you. Let's face it, most people get overwhelmed when they think about the stock market. The sheer amount of information out there, the terminology, and the constant fluctuations can make it feel impossible to keep up. But here's the reality. You don't need to be a finance expert to understand how stocks work. With the right knowledge, you'll see that it's not just a game of chance. It's a system driven by real-world factors like company performance, economic conditions, and investor sentiment. So, why should you care about the stock market? Well, if you've ever wondered how some people grow their wealth through investments, or why certain companies succeed while others fail, the stock market is at the center of it all. It's a place where companies raise the capital they need to grow, and where investors can share in that growth, sometimes making a lot of money, sometimes losing, but always learning valuable lessons along the way. Stick with us for the next few minutes, because we're going to show you exactly how the stock market works and why it matters to you. Whether you're looking to start investing, planning for the future, or simply want to understand the news when you hear about stock prices, you'll get the knowledge you need to make better decisions. By the end of this video, the stock market won't seem so mysterious anymore. It will just be another tool in your financial toolbox. At its core, the stock market is a system where buyers and sellers come together to trade shares of companies. But what does that really mean? When you buy a stock, you're purchasing a tiny piece of ownership in that company. That means you get a claim on a portion of the company's profits, and in some cases, voting rights at annual meetings. But the value of your stock is determined by how much people are willing to pay for it. So, what makes the price go up or down? Well, that depends on something called supply and demand. If more people want to buy a stock than sell it, the price goes up because there's greater demand. On the flip side, if more people are trying to sell than buy, the price goes down Because there's an oversupply. Simple enough, right? But here's where it gets a bit more complicated. Let's take Apple as an example. Apple is a massive company with millions of shareholders, and its stock price can fluctuate depending on many factors. If Apple announces a new product, or if their earnings report shows record profits, more people may want to buy stock, which drives the price higher. But if there's negative news, maybe a product recall or a drop in sales, investors may start selling, and that drives the price lower. Now, this basic concept of supply and demand can seem simple, but there are a lot of factors at play that influence how much demand there is for a company's stock. Some of those factors include things like company performance, broader economic conditions, and investor sentiment. Think about it. In times of economic prosperity, more people feel confident about investing in the stock market because they believe companies will perform well and their stocks will increase in value. On the other hand, in times of economic uncertainty, like a recession or financial crisis, people may panic and sell their stocks, which causes prices to drop. Stock prices don't just fluctuate based on company news. There are a variety of factors, both internal and external, that impact the stock market. Let's start with company news. When a company releases its earnings report, whether it's positive or negative, it can have a huge impact on its stock price. If the company performs better than expected, investors will likely buy more shares, pushing the price up. If earnings miss expectations, the stock price might drop as investors sell off shares. However, it's not just what's happening inside a company that affects stock prices. Broader economic factors play a huge role too. For instance, economic indicators like GDP growth, unemployment rates, inflation, and consumer spending all have an impact on the market. When the economy is doing well, companies tend to perform better and stock prices rise. But when the economy is struggling or there are concerns about inflation or a potential recession, stock prices can fall. Interest rates are another critical factor that influences stock prices. When interest rates go up, it becomes more expensive to borrow money. This can slow down consumer spending and business investment, which can lead to lower corporate profits and lower stock prices. Conversely, when interest rates are low, borrowing becomes cheaper, businesses expand, and stock prices often rise. Government policies also have a major influence on the market. For example, when the government implements new tax cuts, it can encourage consumer spending and business growth, which often boosts stock prices. On the other hand, regulatory changes or political instability can create uncertainty, causing investors to pull back. Then there's global events that can move the markets, such as international trade disputes, political upheaval, or natural disasters. For instance, during trade wars, tariffs between countries can disrupt supply chains and hurt the profitability of companies involved in international trade, which can lead to falling stock prices. On the other hand, good news, such as a peace agreement between two countries, can send stock prices soaring. So as you can see, stock prices are influenced by a complex web of factors, both inside and outside of companies. That's why the stock market is always fluctuating, sometimes on a daily, hourly, or even minute-to-minute basis. Now that we understand what drives stock prices, let's take a look at where all this buying and selling happens. The two most well-known stock exchanges in the U.S. are the New York Stock Exchange, NYSE, and NASDAQ. These exchanges are where stocks are bought and sold by investors, and they serve as a marketplace where companies list their stocks for public trading. The NYSE is the world's largest stock exchange by market capitalization, and it's home to some of the biggest companies in the world, like Coca-Cola, ExxonMobil, and General Electric. The NYSE is known for its traditional floor trading, where brokers physically buy and sell stocks on the trading floor. However, much of this trading has moved online in recent years. Nasdaq, on the other hand, is an all-electronic exchange, and it's known for its focus on technology companies. Companies like Apple, Google, Amazon, and Facebook all have their stocks listed on Nasdaq. It's a much faster-paced and more tech-driven platform, which is why it's often associated with innovation and tech growth. Both exchanges have different rules and requirements for companies to be listed, but they all share one key thing in common. They provide a regulated environment where buyers and sellers can trade securities safely. Other countries also have their own stock exchanges, such as the London Stock Exchange (LSE) in the UK and the Tokyo Stock Exchange (TSE) in Japan. So, when you hear the terms NYSE or Nasdaq, just know that these are places where stocks are traded, and their performance gives us an indication of how the market is doing overall. Investing in the stock market can be exciting, but it's also risky. The value of your investments can go up, but it can also go down, and sometimes it can happen very quickly. We've all seen the headlines about the market crashing or a stock losing half its value overnight. But here's the key. Understanding how the stock market works helps you make better decisions and manage your risks effectively. Remember, market crashes like the one in 2008 are a reminder that nothing in the stock market is guaranteed. Even well-established companies can face sudden declines in their stock price due to bad decisions, market conditions, or unforeseen events. But don't worry. The key to successful investing is diversification. By investing in a mix of stocks and other assets, you can spread out the risk and increase your chances of having more stable returns over time. To wrap up, the stock market is a dynamic system driven by supply and demand, where investors buy and sell shares of companies. Prices fluctuate based on company performance, economic factors, and news events. While there are risks involved, understanding how the stock market works is key to making informed investment decisions. If you found this video helpful and want to learn more about how to invest, understand finance, and make smarter money moves, make sure to hit that like button, subscribe to our channel, and click the notification bell so you never miss an update. Thanks for watching, and I'll see you in the next video. This expanded version should give your audience more depth and insights into how the stock market works. It also provides a well-rounded explanation, making the concepts easier to understand. Let me know if you'd like any further adjustments or if you want to expand on specific parts.